Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, September 16th. Stocks on Wall Street continue to trend higher, building on this week's strong gains, and the global markets are rallying as well. Investors around the world are focused on Poland, where Eurozone finance ministers are beginning a two-day meeting to address the region's sovereign debt crisis. They're tasked with resolving disputes among the member nations and finding ways to implement the deal that EU leaders came to in July. They agreed to fund a second bailout for Greece and to strengthen the Eurozone's $600 billion rescue fund. U.S. Treasury Secretary Timothy Geithner is attending the meeting, and he's pressing the finance ministers to use that fund to fight the sovereign debt crisis more effectively. He also urged the region's leaders to work together to solve their problems and avoid loose talk about a possible breakup of the monetary union.
Besides expanding the power of the Eurozone Rescue Fund, the other item on the meeting's agenda, a second bailout for Greece, may be more difficult to resolve. Finland continues to stand in the way of those funds getting released. It's demanding collateral from Greece in the form of state-owned assets in exchange for its participation in the bailout. A spokesperson for Finland's finance minister said the dispute is unlikely to be resolved this weekend. If Greece does not get another bailout, there's a very real possibility that it will be unable to meet its debt obligations. And if Greece defaults, it would threaten to take down a number of big European banks that are heavily exposed to the country's sovereign debt. Those fears have been weighing on the region's financial sector recently, but that changed yesterday when the European Central Bank moved to address some of those liquidity concerns. The ECB, along with the U.S. Federal Reserve, the Bank of England, Bank of Japan, and the Swiss National Bank, will provide additional dollar loans to commercial banks.
Despite that move, the region's shared currency is broadly lower against most of its major rivals. Right now, the euro is dropping to exactly $1.38 against the greenback. That move shows that many traders are still concerned about the eurozone's solvency problems. Analysts say that while the central bank's move to provide dollar funding does provide a needed backstop, it only addresses the short-term symptoms of the longer-term disease. Meanwhile, as the dollar rises against other currencies, it's weighing on the value of most assets priced in dollars. That's certainly true for crude oil, which is dropping back below $89 a barrel. But gold's status as a traditional safe haven is helping it buck the downward trend among commodities. It's rising to around $1,790 an ounce, following a big decline yesterday.
Despite this week's stock market rally, the longer-term outlook for the global and U.S. economy continues to deteriorate. And that's being reflected in a new trading strategy by Goldman Sachs. The firm shifted the sector weights it's recommending to clients in anticipation of lower earnings growth among S&P 500 companies next year. Goldman says it's moving more heavily into consumer staples, telecom services, and information technology, and it's moving away from consumer discretionary, industrials, and materials stocks. Meanwhile, perhaps the day's biggest stock decliner is Research in Motion. It's tumbling more than 20%, following more bad news for the BlackBerry maker. After yesterday's closing bell, it reported a 59% decline in fiscal second quarter earnings and said sales of its smartphones and tablet computers came in well below expectations. Shares of RIM have lost more than half of their value in the past 6 months amid strong competition from the Apple iPhone and handsets using Google's Android operating system. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.